This is a trade recap for Wednesday, April 22nd, 2026. This was number 3 of 5 for our little paper trading data gathering segment. And all in all, pretty straightforward day. Nothing really out of the ordinary that I can think of. But yeah, so for those that are unfamiliar with what we've been doing, typically we've been doing an exercise called one and done. So it's basically where you just do one singular trade throughout the day or in the morning, and that's it. That's all you get. The caveat of, again, a reset trade if warranted and planned for. Right now, we're kind of taking a little break from that because I'm part of a study that's being put on by my coach and mentor. And for the study, we need to gather up some data, and that's why we're doing paper trading right now. And that'll just be for this week. Next week, we'll go back to the real deal, and then we'll stay that way for the duration. So, not really doing anything different on the paper side. Did take me a couple days to get everything kind of sorted out in terms of the settings and everything to make it sure it was matching one for one, just because it's been so long since I've paper traded. Trying to think, it's got to be, man, I can't remember the last time I traded on a paper account. I want to say it's got to be over 4 years now, 3 years, somewhere in there. But yeah, like I said, pretty good day, pretty normal. And yeah, but as you heard before, this little study, as well as the one and done exercise, were created by my coach and mentor, who is Pat Mitchell over at Trick Trades. So if you're new or struggling with day trading and you're looking for that high level professional coach, Pat is the one you want to be learning from. You can find more information about the service over at tricktrades.com. You can read up about Pat, his background, what he offers, what he's trying to do, and all of that. And that's more or less take a standard kind of retail trader and turn them into a professional level trader to where they can have a solid living doing this. The information he puts out there is top notch. He does these extra things like the study and these exercises and all this stuff, and it is phenomenal. He puts a lot of time, a lot of effort into it, and it's kind of unique in the fact that he is a very successful day trader. He is a retail trader, but does it on a professional level to where he could walk off into the sunset. And it could have years ago, but has decided to stick it out and teach others how to do this, which is something very unique, I would say, in this space. Now, with that being said, it is an education service, not an alert service. So again, have realistic expectations there. And if you would like a sampling of the information he puts out there, you can jump over to his YouTube page where you'll find over 1,700 videos that he has done over the course of his, I would say, the past decade plus of trading. Absolute massive amount of information there. Honestly, you're not going to probably be able to crawl through all of it, pull out all the pieces, and put them all together. So if you want to try it, you're welcome to try, but I would say you're better off just joining the service. If you are interested in joining the service, I do have a link to the memberships down below. Saves you a little bit of money on your first month, and you can give it a shot, see if it jives with what you're looking for. If it does, cool, welcome. And if it doesn't, all good. Other than that, let's go ahead and get into the live recording for this morning's trading session. So if you're new here, it's kind of lay of the land. We only trade 2 tickers, SPY and Qs. So this top row, this is SPY. This bottom row, this is Qs. On the left here, we have our daily charts. In the middle, we have our 1-minute intraday charts, and I keep my order execution here on the right. Now, you see these blue levels that are marked out. These are the levels Pat picks out starting the night before and refining the morning of for our trade plan. And once he sets these, they do not move for any reason whatsoever. If you're moving your levels, especially after the market opens, you're something's wrong there. And again, you probably don't actually have a trade plan. You're just kind of flying by the seat of your pants, which will not lead to anything good. Now, as you can see, we're kind of opening close to Q's top level here and kind of just below SPY's. So the idea here is if we can get some distance off of Q's level, we will take that short. And if SPY comes up into its level, again, we can also take that one short. But it's one of those things where you just got to kind of, again, see how things actually open up, play out. Because if SPY comes up, it could put this above its level and high enough to where when it pulls back, it holds this as support and then squeezes out. So again, just little things you got to watch out for when you're, again, where you're opening up and all that preparation. Again, key to this is preparation. So it is something that, again, that is what makes or breaks you in these, again, trades, really. It is that preparation. And I can think of a time when I did not put as much weight on that as I should have. And definitely, again, there is a difference in the outcomes. So this is actually at the open, about 5 seconds in. Recorded it a little late, but again, we'll go ahead and get into it. So you see, just again, kind of bouncing around, getting things kind of sorted out, watching, waiting. Q's kind of, again, opening right on top of that level. Now it's coming down, so it's giving a little bit of distance, which is kind of what you need if you're wanting to take that short. You can't just go right into it, especially, again, there's a little volatility on that initial candle. Kind of see what SPY wants to do as well as, again, Q's. So again, just a little bit of patience there. Sometimes, again, it has the healthy amount of distance that you need. Sometimes it doesn't. Just got to be able to recognize that. So as you can see, we're kind of getting bought up a little bit there. Kind of see what SPY ultimately wants to do as well as what Q's wants to do with that level. SPY obviously still has room to come up. So again, patience is always a good thing. At this point in time, I've judged that with Q's. If I got close enough that, again, I would start in on that one. So kind of came up a little bit, wanted to get a little bit closer, but deemed, again, good enough there. So started in with 2. And then just kind of waiting to see where it goes. Again, starting to hold a little bit there. So this is where I also want to be patient and, again, save any corrections, adds, things like that for, again, the appropriate time and place. So just marking out kind of the levels that might be of interest that are kind of from pre-market. Again, seem to be coming down. SPY's still actually holding its level, so it's one thing that, again, got to be cautious of that. So again, you got to pay attention to both because these two are kind of linked. Kind of doing the same on SPY there, just again, get some levels on there. Notice again, we're starting to get that follow through, so peeled one off there. The last one loaded. Got a little bit more follow through and took the second one off right there. So yeah, kind of see, came down. SPY still holding, so that's one of those things where like need to be cautious. Gives a little bit more follow through. Kind of comes down to that yellow level that I'd marked. Just getting things kind of zoomed in. More screenshots. And that was basically my one singular trade for the day. So I'm still kind of doing one and done, just with the paper account right now, obviously for that data set. But treating it more or less the same, again, because that's what you're trying to do. You don't want to change, again, especially when you're trying to figure things out. Don't change a bunch of things at once. Otherwise, it kind of will work against you. You'll have too much noise. So go ahead and close this one now and kind of get into the actual chart. Because as you can see, Qs popped up, entered in on that second candle, came down, basically somewhere between, again, like this range of pre-market and a little bit. There was another range earlier in here, held and came back up. So it was one of those things where that's why you pay into targets. You can pay that reaction and into targets that way. Again, size in, size out, as Pat tells us. That's very important. And you also got to be cognizant of where you're opening up, because where we are opening up in terms of all-time highs on Qs and potentially even a run at all-time highs again on SPY. I mean, there's a real capacity here for it to squeeze. So sizing appropriately should be something on your mind. Because one thing, again, Pat again repeats this several times a week, is like, what is, yes, what should be a very basic question that even I for a long time didn't give it the right weight. And that is, what is the only thing you can control in a trade? And the answer to that is risk. So how do you manage your risk? Well, part of that is through size. So if you're not doing that and you're, again, loading the boat on a trade where you probably shouldn't be loading the boat, yeah, you're going to probably get your hand caught in the cookie jar, and that's not going to turn out very well. So little lesson, or again, little tip, I guess, to pass along on that one. But all in all, good trade. Entry could have been a little bit better in terms of refinement. Could have waited for a little bit closer for that last contract into the target, instead of taking it off as quickly as I did. But where we're coming into was, in my mind at the time, appropriate. So again, continuing on with the whole theme of identify little tweaks, little adjustments you can make, and then just make them and continue to do so. And that's the majority of this. So just over time is making fine, singular tweaks, not trying to change too much too fast. Otherwise, again, you don't know what, again, when you make these changes, which ones work for you and which one worked against you. And again, maybe you need to undo that adjustment. So it's one of those things where just take it slow, work on one thing at a time. And that's truly how you actually kind of get to where you want to go. Once you've kind of put some other things in place, and yeah, you can actually become very, very consistent. Even with the paper trading, again, trading exactly how I would if it was live. Still, again, I think we're still rocking around 97% hit rate. So still doing really, really good in that regard. And that is all thanks to having a coach and mentor who knows exactly what they're doing. So if that is someone, again, your need or want, probably more of a need, especially if you're struggling with this. Yeah, Pat Mitchell at Trick Trades, that's who you need. End of story. There is no one better. But all in all, that's all I got for this one. And we will catch you tomorrow for number 4 of paper trading, 4 or 5. So almost done with that one. And yeah, we will catch you then. Have a good one.